Welcome back, folks. Dow Industrials right now trading down 54. NASDAQ is up 14. S&P's down 7. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. Don't forget, folks, Basil has an outstanding show here every trading day, 12 to 1 Eastern Standard Time. Now, he also has a great newsletter, The Opening Call. Now, if you come over to our website at TFNN, you're going to hit newsletters. You're going to see the opening call right in the very top. Our man, Mr. Basil Chapman, you're going to hit that view button. Basil is going to be doing a workshop, folks, for his subscribers a week from today. You can be a subscriber. It's very easy to do. As you come down, you hit newsletters, you hit the opening call, you hit subscribe. You can subscribe for a month, 6 months, or a year. They all come with a 30-day money-back guarantee. And what Basil's going to be talking about, it's a 90-minute workshop on October 30th, a week from today, 5 to 6:30 Eastern Standard Time. The Chapman Wave tools that helped identify the market's last top and what to expect as we go into the new year. When we go into the new year, you're talking about something pretty amazing. 2019 coming at you, folks. Gotta love it, man. Basil Chapman, what's going on, brother?
2019, hard to believe.
It is, man. Oh my God, I'm telling you, man. You gotta listen, man.
Last 20 years ago.
Listen, you know what's so cool, Basil? Right now, I'm approaching 52. When I turned 60, I started counting backwards.
You went backwards.
I did.
I love that.
I'm telling you, folks, just do it. Why not? You know what I mean? It's like, okay.
It's also how you feel. You know, it's interesting because I don't feel my age. I play sport. I'm as active as I can be, and I think that it's the attitude one has. But certainly, when you see your kids, and then that's how you tell your age.
Yeah. Well, and when you're in this market every day, man, you better stay in shape.
Let's face it. So this is a very interesting thing because look. You'll see this on the chart on the left. I'm showing the Dow chart, as I always do when we do our interviews. On the left is the daily, in the middle is the weekly, on the right is the monthly chart. And this 200-period moving average, it's like there's a gap or a particular movement in a particular chart that you're looking at. And if you move away from it, you don't even have to look at that again until it becomes a focus. And when we started to come down below 26,000, I said, okay, now we've got to start looking at the 200-period moving average, this orange line, because that's going to be very important. It wasn't before, and now it is. So when we had the sell signal, this is what I'm going to be doing in my webinar a week from tonight. And boy, what nice timing for this.
Seriously.
So we've got, we were moving higher. And the high that was made in the Dow at 26,769 on the 21st of September was what I call a peak D. In other words, I grade each higher peak, and I like to get to the fourth highest peak. That's where other things can happen. You can go higher, but it's at the fourth highest peak. And you can see that at that fourth highest peak, the MACD, which is what I'm going to be discussing at the webinar, the moving average convergence divergence, was very strong, and the stochastic was up at 97%. That is really high. And then there's a pullback. It's actually a pullback that we got. We were short, and we had to quickly cover because there was that big gap up and moved to a higher high. And that higher high was at 26,951 on October the 3rd. But the more I looked at the chart that afternoon, that evening, that is the afternoon of the 3rd of October, I said, wait a minute, the MACD isn't anywhere as strong as it was. The stochastic is way weaker. It's now just at about 80%. I always say over 80% is good, and here it is just barely above, makes an all-time high. That's a divergence that's very important. Then there's another technique I'm going to demonstrate. It's what I call the Chapman Wave inside track repellent or propellant zone. And you can see this little red line, this little green line right there. The price kept going into that and then got pulled away. In other words, it was like a repellent zone.
Okay.
And once again, on that 3rd of October, we made what I call a little doji candle right at a leg E. And I'm looking at this, and I've got a sell signal on the 120-minute chart, but I haven't got anything in the daily. But I said, wait a minute. Everything I'm looking at suggests that if there is a pullback tomorrow, if the futures open weak, we could gap down, and that means we've been repelled from this inside track repellent zone. And that's exactly what we got. We got a leg E, where we've got to be careful. You've got a doji candle, you've got the inside track repellent zone, and a gap down. So before the market opened, I said, we're going short. We've been short. We've taken a little profit off at the 25,000 level. And for my subscribers, we're going to have a plan for tomorrow. But look what happened. We went to a lower low to a leg C. Now I'm going to just quickly move to another chart to show some other technique, which I will introduce on a week from today. I'll just start discussing it. And that's a technique that I've used for a long time. It's called the Chapman Wave 5. And today we went from a 4 going to that rally that went to a high just on the 17th to a leg 5. And it's a leg C down in the Chapman Wave, but it's a leg 5. And that says, both in the daily and coincidentally, you'll see right here in the 120-minute chart, because I'm going to be talking about different time frames, we went to the 5 there. So this says there should be a rally, and this rally could have some legs to it because of the mannerism in which we went down today and the way the VIX turned down. We were short the Dow. We were also short the SMHs, the semiconductor index, because I've spoken to you all year about and saying there's a problem here when the semis aren't making new highs after March, and they've led the way up and down for years.
Sure. Right.
So now what we've got is we've got a whopping move from the 114 level down to today's low of 92.29. So there could be a little bit of a bounce. We were short. We were the 3 times short index. So we've had some real nice. We took about a 17 or 18% gain in part of that position. So we might just get out of that, maybe even switch. I'm not sure yet. We'll see how we close today. But the major thing is, and this is what I'm going to be discussing now that I've got the charts from the sell that we got. What would implement a buy signal? And that's what I'm going to be talking about. I'm talking about an internal low and a residual low. And I like to think of it. If you think of an earthquake, you've got the earthquake, and then you've got the afterwards you get that aftershock.
Yes.
Sometimes the aftershock has a more devastating impact than the earthquake, and sometimes not. And I'm going to discuss that. I think at this particular point we're probably making what I call an internal low. Then there should be some kind of a rally, and later on we should see some kind of a residual low. Whether or not it goes down to the 23,300s. This particular rally that I think we might be involved in right now, that's going to be the tip-off. And look at the weekly chart. Weekly went from the 26,616 in the Dow on the 26th week of the 26th of January. Also made that 5 in the Chapman Wave. Comes plummeting down, makes the H pattern. This H pattern I'll be talking about a lot in the webinar because it's very important in my work. And we have this rally to a new all-time high. Look at the technicals in the weekly that weren't confirming at all. So I consider this is going to be a counter-trend rally, and then we'll have to come down and do some retesting. And this monthly chart, we've got a week, just about a week and a day to go for the month to complete of October. You can see that this monthly is so important. The technicals in January were very strong. The technicals right now are not very strong. And if you look at something like the SMHs, look at the semiconductor index monthly chart. Look at that candle. That's not a good candle. And look at the IWM. So these are all things I'll be talking about. What do we do? How do we resolve it? What are we going to be doing? We'll probably start looking at potential stocks coming up this week, in fact, going into the webinar.
And folks, the way you come to the webinar, go to TFNN, go to newsletters, you see the opening call, you subscribe, 30-day money-back guarantee, great webinar next Tuesday, 5 to 6:30. Basil, have a great one, safe one. We look forward to the show tomorrow.
Thank you very much, Tom. You too.
Thank you.